The GameStop short squeeze rebellion continues as the company surged as much as 145% today before reversing course and finishing the day nearly 20% higher, only 20% higher. And the social platform Reddit continues to fuel this flame. Let's get to Kate Rooney with more details on this. Kate.
Hey, Melissa, GameStop's rally has really been driven by a frenzy of traders on social media. If you look at Reddit, namely the forum Wall Street Bets, which has more than 2 million subscribers, there are dozens of forums with traders encouraging each other to push shares higher and squeeze out short sellers. It's pretty hard to find ones that are PG enough to use on air, but just to give you a little color, one user here says about GameStop, "Do not sell. We can keep holding our shares, but, quote, they can't keep holding their shorts." Another says, "Final big push for the day, boys. Don't stop now." And finally, "Bought mine today as well and holding. Good luck all." If you take a look at Google Trends as well, the term GameStop stock has risen in popularity in recent weeks. Most of that interest, according to Google, coming from Oklahoma, Missouri, Wyoming, and Rhode Island. We should point out, though, that the trading action for GameStop wasn't just from the likes of Robinhood traders. It was also the most actively traded name on Fidelity Monday. We've seen this enthusiasm before for some other stocks, regardless of fundamentals. If you remember Hertz, that was a top traded stock in 2020 with some similar buzz on Reddit, despite declaring bankruptcy. Startup brokers I talked to say there's a lot of good, of course, coming from this retail boom by expanding access, but they fear first some of that harassment online. They also say that people touting stocks on social media are not verified. Those trades and motives aren't transparent, and the new inexperienced traders could be left holding the bag. Melissa.
I think that's key, Kate. We don't really know who all these users are. They hide behind whatever handles like GameStop rocket ship. And we don't know if it's an actual real person, for one. It could be a bot, or if they have other sort of nefarious desires to push a stock up for various reasons.
Yeah, absolutely. The anonymity of this is a big issue that other startups talk about. And there's one example, a company called Common Stock that links to your brokerage account. And they say that they do that so that the trades are actually verified. So if you tell someone, I just bought $1,000 worth of Hertz or GameStop, they say that it shows that you've actually done that. So that is a big fear for people, saying that you don't know who's behind these trades. And some of these YouTube videos of gains and people claiming that they have earned millions of dollars on some of these startup trading apps, you really don't know when it comes down to it.
Yep. Kate, thank you. Kate Rooney. Now, I know there's going to be a cohort of people out there who've lived through, the bubble days, et cetera, the manias in the past, and they say this is no different from the Yahoo chat rooms of those days. Why is it different now? This has been going on for time immemorial. But basically, the difference is that today, retail traders are active in the market like no other time in the past. So, Guy, what do you make of this whole thing?
Well, that's exactly it. I think last year, 10 million new accounts were created, 6 million Robinhood accounts. Obviously, a lot of that money, those stimulus checks seemingly found its way into the stock market. I think once sports went away last year, I think a lot of people found their fix basically betting on stocks. So it all's morphed into this. What's interesting, though, in terms of GameStop specifically, I mean, this started back on January 13th when they gave you their holiday comps that were better than expected. They said, I think they had a VC behind them taking a couple board seats. And there have been some shops that have been on back of this, quite frankly. I think Hedgeye being one of them. All that being said, none of this makes a lot of sense when you see a stock go up to, I think, $158 today. You saw the big move to the downside, traded, I think, 160 million shares, typically trades 13. The unfortunate reality, in my opinion, is that more people wind up losing money here than making money. And I think, unfortunately, like many things in life, people need to learn and figure this out the hard way.
If only pockets of the market are impacted by this price action, Karen, why should we care? I mean, I hate to say it, but so far we've seen Melvin Capital, suffering big declines because it is a hedge fund that was short this particular position. The retail trader may ultimately get hurt, but there's no systemic risk from this massive short squeeze that we're witnessing either in GameStop or any of the other stocks, is there?
I don't know. I think there might be that if the retail investor goes away, right? I mean, that's what happened after the internet bubble in 2000. The retail investor went away. This, I agree, this is different. This is a turbocharged Yahoo Finance chat board kind of thing. This is insane, though. This is on a scale not, I mean, you know, I saw today of, I don't know, 14, 15 million shares traded at 95. I mean, you know, 4 million traded at 120. Those are some gigantic losses. The thing that's interesting to me, though, is I'm curious to see whether the SEC really wants to take a look here at, are they attempting to manipulate the markets? Clearly, yes. And the other thing is, I wonder if somewhere in there there's a 13D violation. You can't act as a group with more than 5% of the stock working together to try to effect some change without needing to file. So, I mean, I admit this is a very diverse group, very disparate and made up of smallish players. But, you know, clearly this doesn't smell right. This is insane.
Yeah.
What could go wrong, really?
What could go wrong?
Shepard Smith here. Thanks for watching CNBC on YouTube.